learning those advantages, turning those advantages into trades. Guys, I will not tell you when to enter the market, when to exit the market, and even more so, when you ask me the question, hey Mark, can I add these areas to my chart? Absolutely you can, Paul. You can do whatever you want, and that's everybody in the room. I don't put any restrictions on you. The question is, and this is what I encourage you guys to ask when you begin to add more. Do you need it? Do you need those areas for entry? Is there not enough opportunity in the market for you to find what you're looking for with the basic setup? And if the answer is no, it's just not enough opportunity in there, then by all means change your plan. But I would encourage you, take 100 pictures of rules being met off those new areas and make sure that it actually wins more than it loses. One of the things Nexgen does, guys, and we do really well, is we pour an enormous amount of time into creating these very simple plans for you. They have been tested, they have been researched, they have been proven, and when we hand them to you, it really is the path of least resistance to get you to where you want to be. Today is Thursday, January 15th. We did have some unemployment news this morning. Let's do the old reboot, right? Looks like it was good news. Less unemployment. Love that. Empire State Manufacturing Index, I don't know what it means, but it was good. Philly Fed, don't have a clue, but it was good. And you know what? Some of you can say, oh man, the news made it go up. It might have. But I don't trade the news, and I don't teach you guys to trade the news. The only reason I even look at the news is because there can be a reaction. There could be some sort of reaction from someone with more money than me that makes it go up or down or too fast to even read. So check it every morning, and I just sidestep the market. It's a great time for breakfast. We're going to do what we always do. We're going to do it. Whoops. Hold on. My slideshow's on the wrong. I don't know why my monitor's got all jacked up today. We're going, there we go, to learn to read our charts, guys. That's my job. My job, believe it or not, isn't to call trades, to be your therapist, although I like to be. My job is to help you learn to read indicators, to be able to look at a market and say to yourself, man, I have advantages. I think I'm going to take a trade. That's it. I see everything going right. I want to be a part of it. That's what I teach every day, guys. It takes 3 rules and 2 charts, whether you are on NinjaTrader or whether you are on TradingView. You're going to spend the majority of your day doing nothing. I can't stress this enough. Tesla, oddly enough, I am. It seems. Only because I have broken my brain enough, I have kind of worked through it. Guys, you're going to spend a lot of time waiting. Don't tell your friends you're a day trader. Tell them you are a professional waiter. Because 90% of the day, that's exactly what you're doing. You're sitting on your hands. You're doing nothing. You're saying to yourself, my money is so important to me that I only want to take trades when I have an advantage, a clear-cut edge in the market from the pattern that I'm trading. And if I don't have that edge, I choose to do nothing. And you're going to understand through your chart reading, this is pretty cool, where the market is most likely to continue. Guys, this is your entry. This is where the market is most likely to bounce and continue in the direction of an established trend. You'll understand where the market is likely to go. This is going to be an awesome way to pick your targets. And you're going to understand where the market is likely to stop. We call these termination conditions. And a termination condition can actually halt the forward progress of an already established trend. So we're going to use this concept. Whoops, excuse me, guys. And what we're going to do this morning is I want you guys to learn this and at least believe it a little bit. The market goes up and down. That's not too hard to hold on to. And somewhere in that uptrend, there's typically a fight. Sometimes there's multiple fights. That little fight isn't a change in trend. That little fight isn't anything more than an insignificant retracement counter to the underlying trend. The methodology that we are about to talk about on both NinjaTrader and TradingView is designed to put you into the market right where that fight is most likely to be lost, guys. That's going to be your high probability trend trade. This is our focus. This is your foundation. If you can wait for that fight, there's that 90%, you can take a trade that you can prove wins more than it loses. And now here's Exhibit A, crude oil. The market is trending up. Bum, 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 bum. See that circle? That circle, my friends, is the fight. That little down against the up. You're going to pinpoint that line inside of triggers, and you're going to use that for your high probability trend trade. That is a high probability trend trade that went exactly where the market was likely to go. That particular entry was worth a little over $200 per contract. And then the market changes direction, and it's going down, and there's that fight. It looks like a tail on this big chart, and then once again, there's that pullback right to a line inside of triggers. Guys, this is your high probability trend trade short. And sure enough, it went right to where the market was likely to go. In this particular entry, 35 to 07, was about 280 per contract. This is what you're about to learn. If you keep it this simple, if you keep it this focused, if you wait for these advantages to come into play, guys, life gets pretty easy for you. So your job, I'm going to go through it step by step. Learn the rules. Can't stress this enough. Learn the rules. Learn not only what they say, but know what it looks like to have your rules met. And then post in the room to make sure that your understanding of the rules is accurate. One of the biggest mistakes I tend to see among newer users is they look at these rules and they create their truth, guys. And very often as a brand new user, your truth of the rules isn't accurate. What I teach in the room, how to read those indicators, that's where we want you to be. So post in your room, post in the room, lots. I mean lots. Tell me what you saw. Tell me what you did. Show me where you did it. And we'll do a private session right here in front of everybody. Let's make sure that you're reading your indicators properly. The second thing is, guys, keep it simple. Don't overthink it, right? So if you look in the chat box, if you scroll up just a little bit, I've put in a KISS plan for TradingView, one for NinjaTrader, and a couple spreadsheets in there, guys. And this is the second step to getting where you want to be, ASAFP. Use the spreadsheet that I gave you. So when we look at the gifts that have just arrived, there is the KISS plan for NinjaTrader, and there is the KISS plan for TradingView, and there is the spreadsheet showing what it looks like to have your rules met in TradingView, and then there's the spreadsheet showing you what it looks like to have your rules met in NinjaTrader. I'm giving you everything you need to be successful. But the second step in becoming a confident trader ASAP, guys, the first thing is post a picture. Let me see what you're doing. Because every picture you post, let's get rid of the profanity. I had a moment yesterday. Every picture you post, we're going to talk about the good. We're going to talk about the things, the challenges that may have been present. If you use the spreadsheet and you start tracking your trades and you listen to the feedback, guys, you're going to recognize your thing. You're going to see what you're doing great, and you'll be able to latch onto that. And you're going to see where you're making mistakes. And you're gonna commit to avoidance. So every morning I want you to take 3 minutes. That's it, 3 minutes. It's all it's gonna take to look at what you did yesterday, your annotated charts, and ask yourself what worked. And focus on that for the day. Repeat those things that are bringing you success. And ask yourself what didn't work. That's your thing, because you're gonna see it repeated in the feedback from class section. Maybe it's trading and determination conditions, right? Maybe it's jumping in too early, too late. But guys, all you're going to do is you're going to look at that spreadsheet and you're going to say to yourself, okay, I'm going to focus on having momentum and path. Those seems to be driving me. Every time I'm ready to take a trade, I'm going to make sure I'm not doing this thing that's robbing me of success. And I'm telling you, it will change your life. So we're going to learn the rules, TradingView and NinjaTrader, for a high probability trend trade. I want you guys to trade, to practice, to simulate. Post in the room. Let's make sure you're reading your indicators correctly. Guys, if you are not even trading the plan that I teach, post in the room. Post in the room, because if you're having challenges, man, I can pinpoint them. We can come up with an idea, a way to correct it, because I'm going to be honest, there are no mistakes that you can make as a trader that I haven't already made 1,000 times and figured out how to fix. So show me what you're doing. Keep it simple. Simplicity. What we're going to talk about is 3 rules for the high probability trade, whether it's NinjaTrader, whether it's TradingView. It's 3 rules. We're going to start with NinjaTrader here. This is the recipe for a high probability trade. The rules are in white. They're simple, they're easy to learn, they're individual. Let them stand alone. And then this is your flow chart. Watch this. We're going to do pictures today. And I want you to think of it as a flow chart. Someone said this in the room, and I thought it was brilliant. If my large chart has strong triggers, then I'll make sure there are no termination conditions. If that's true, then I'll define my entry. And guys, if you leave it if then, it takes the guesswork out. There's no wondering if you have the perfect trade. So these 3 rules create 3 advantages. By the time you enter the high probability trade, you'll have the advantage of momentum, letting you know that the market is going to be difficult to stop in the direction of that established trend. You will have a clear path, no areas in your way on that big chart to create a bounce, and then you will have a clearly defined entry. Let me go back to it again. It's just a pattern. So when the market says up, when the momentum is present, when you haven't reached a line, you'll come to this chart and define your entry. Guys, this is exactly the 3 rules. That's your pattern. 3 rules, 2 charts. We're going to use a big chart first. Our large chart leads the way, and there's some of you that don't even look at a small chart until the large chart says go. Your large chart is a very slow chart. It's a very broad stroke of a brush. It's a slow moving chart, and it's difficult to see change. Difficult to see change on this big chart. You'll use the first bar, the most current bar, one stinking bar, to define direction, momentum, and areas. You'll know which direction the trend is. You'll know that the momentum is in your favor through rule number 1, and you'll have no doubt that there's nothing in the way to create a bounce on that big chart. No areas in the way. Guys, rules 1 and 2 are met right here. When the rules are true, the small chart's just going to show you the fight. It's going to show you that little retracement, and you're going to pinpoint your perfect entry. And it's going to reduce risk, and it's going to maximize profit potential. And it's a pretty simple recipe, 3 rules and 2 charts. We use 2 charts because this is my favorite metaphor, I think. Who are you trading with, or who are you trading against? When you look at your big chart, I want you to believe that there is a powerful group of multi-gazillionaires. And when they want the market to go up, dagnabbit, it goes up. And when they put momentum behind it, holy crap, it's hard to stop. And when there's no key areas for them to make decisions at, guys, it's a freight train headed to the mountains, and there's nothing that's going to stop it. That's your big chart, and the big crowd wins. Your small chart, these are the ne'er-do-wellers. These are the men and women who still have gazillions of dollars, and they think it's fun to poke the bear. And they create these cute little retracements, and maybe they're taking profits. Maybe they are attempting a short trade. I don't know, but they do have enough money to push. They typically lose 70 to 80% of the time, which means that if you're following the big crowd, if you're cruising with the money people, you're likely to win 70 to 80% of your trades if you're following the rules for the high probability trend trade. So we're going to use areas on both charts. Lines. Keep it simple. Areas are horizontal lines that can create a bounce. I think that is going to be my new clinical definition every day. Horizontal lines that can create a bounce. They do have names. There's divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s. When the market is trending up. A divergence high can create a bounce. Fibonacci resistance can create a bounce. Yellow one-to-ones can create a bounce. So when the market is trending up, each of these areas is an area of resistance. When the market is trending down, the same is true at a divergence low, at Fibonacci support, or at yellow one-to-ones. So anytime the market is trending down, these lines behave as support. It's like a floor. It's just areas of support and resistance. Both charts have them. Both charts also have trigger lines, and trigger lines show up in everything that we do. There are small triggers, there are large triggers, fast and slow. Notice that I'm not talking about the math, guys. I'm not saying this is 10,000 calculations based on multiple time frames using an algorithm to sort out to create an area of resistance. You don't need to know that. You don't have to know how internal combustion works to drive your car. You don't have to know how to build a watch to tell time. Just know that it's resistance. Triggers, small and large, fast and slow. That's all you need to know. When they're going up, they're green. When they're going down, they're red. Trigger lines show up in everything. You'll use these trigger lines to define the advantage of momentum through rule number 1. You'll take a comparison of these trigger lines and those bouncy lines on a large chart to define a termination condition, to let you know when you shouldn't be taking that next trade because you've lost your edge. There's no longer a clear path. And you're going to use these large trigger lines on the tiny chart, the small chart, the fast chart, and that's going to pinpoint your perfect entry, that tiny little fight and where it's likely to be lost. Triggers show up in everything you do. Don't overcomplicate it. Let it be black or white, right? If I have strong triggers, and only if I have strong triggers, will I go look for rule number 2 as a brand new user. Strong triggers are pretty easy, guys. In an uptrend, when the background is green, when the market's pushing up, when the buyers are in control, both small and large triggers will also be green. Color coordination's a big part of it, guys. And if the colors don't match Exhibit A, you can never have strong triggers. So that kind of takes a little bit of the guesswork out. Strong triggers is one look, regardless of the direction. Small triggers must break above and away from the large triggers. Looks like scissors opening. If there is space between the two and the colors match, you have strong triggers. Rule number 1 is met. You have the advantage of momentum. Whether it's a tiny little gap or whether it's a big gap, momentum is there. In a downtrend, smalls break below the large, large or wide, space between, whether it's a small little gap or whether it's a big gap. This is your look for momentum. Momentum lets you know that the odds are favorable for the market to continue in the direction of the trend. Momentum is difficult to stop. Momentum is the first advantage for a reason. You will recognize momentum, smalls above the large, space between, on the most current printing bar in the market. Is everybody good with that? This is it. 100%. Rule number 1 met. If there is no space. Good afternoon, Miss Jen. It would be my pleasure. If there is no space in between your small and large triggers, if there is no gap, if there is no separation, if the two have come together, your triggers are weak. Weak happens to be the opposite of strong, which means that my rules aren't met. Odds favorable for the market to continue in a trend feels wonderful. When I have weakness, anything can happen up or down. Let's go back and look at that live market again. Strong triggers, beautiful, pushing a market. Weak triggers, this is where reversals come from. This is where key Fibonacci areas are more likely to hold. Strong triggers, driving that market down, waiting for the fight, creating opportunity. Weak triggers, this is where reversals happen, even from the middle of nowhere. Guys, let it be black or white. If I have weakness, I choose not to look for a trade. If I have strength, wild freaking horses can't keep me from looking for rule number 2. Everybody good with that? That's rule number 1. It is a single picture. If there is no separation, there is no strength. Well, Mark, isn't there opportunity without momentum? Absolutely there is. But learn the basics, and then you'll see more. The second advantage is a clear path, guys, making sure that there are no termination conditions, no likely to stop areas. We want room to profit targets. What's a termination condition, Mark? Well, I'm glad you guys asked. A termination condition is a bouncy thing on the big chart. It's an area on the large chart. These areas are where the large crowd make decisions, where buyers buy and sellers sell, where fights happen, where reversals come from. The thing is, I never know if that line is going to break or hold. So what I'm going to do is I'm going to first figure out when I just shouldn't trade into it. And here's when. When the big crowd gets to a line, means price. When price reaches a line, that's all it takes to set it off. You got to say, I saw that. I saw the trust review that you left too, and I appreciate that. The trust pilot. I think that's amazing. Let's keep it going, man. And yes, guys, the funding company does actually pay people, and we pay fast. The plan that I'm giving you for TradingView is a good way to do it. Guys, when price reaches an area, the large crowd has gotten to the area, and now they're going to make decisions. And their decision may be to take profits and create a little untradeable bounce that if you enter the market would pull you out of a position. Their decision may be to reverse the market completely, changing direction. Any long trade gets absolutely shut down, or they may just go blowing right through the area. Here is the gospel truth. When price reaches an area, you will never know what will happen. But here is the saving grace, is you don't have to know what's going to happen in the market to make money in it. What you have to know is that if price reaches the area, decisions are being made. Your trigger lines, not price, will tell you everything that you need to know about that area. And if you reach that line, and 4 out of the 4 trigger lines remain below resistance, this is an area that could stop the market. This is an area that could create that untradeable bounce. This is an area that could reverse it completely. Since you don't know what the reaction will be, the safest route, the highest probability chance of not giving money away arbitrarily, is to simply don't trade into the area. Don't initiate a trade directly into a termination condition. If price reaches Fibonacci support, yellow 1-to-1s, divergence low, ask yourself out loud, where are my triggers? And if all 4 trigger lines remain above an area of support, sit on your hands. Wait for the reaction. Do nothing. If you're following the KISS plan, that is your only course of action. And guys, this rule is based on tens of thousands of pictures, countless hours of study. And it came to be because 60% of the time, these damn things work every time. 60% of the time, when you trade into an area, you're likely to lose. More likely to lose than win. And guys, you will get away with one every now and then. But more often than not, your trade will fail, which means that you don't have an edge. You don't have an advantage. You're not trading a pattern that you can prove wins more than it loses. So be patient for a second. Wait for the reaction. Price reaches an area. Number 1, big stop sign. 4 triggers or above, I have no freaking idea what the market's going to do, so I choose not to enter a position. If I'm already short, I might choose to hold because of the momentum, but I'm not starting a trade directly into a termination condition. If 2 of the 4 triggers get below the area of support, this is what we call a 50-50 look. And this is actually the second trade on the plan that I gave you. The 50-50 look, as long as there's momentum, says, hey, this area has the potential to break. There's a tremendous amount of opportunity in these medium probability looks. Guys, this will probably be most of your trades. 50-50 says potential, not clear. So they just have to be managed a little more assertively. And there's a different set of entry rules for them. But if you don't understand momentum and you can't identify a termination condition, you'll struggle with the second trade. So focus on the easy stuff first. When all 4 triggers break below the area of support, support is considered broken. The path is now clear. You'll find that support will behave as resistance. that your path is clear and it actually remains clear until you reach the next line. And then once you reach the next line, we go right back to number 1. So here's your picture. And you know what? I'm going to drop the PowerPoint that I'm using right now in the room. You guys will have this on hand. You can study it, go through it. Price reaches an area. 0 triggers. It's bright red. Don't do it. There's no reason. You don't have to. There's so much that happens in the market. You don't have to trade into areas. You may choose to, but you don't have to. If 2 of the 4 triggers are through, it's still a red flag. That is not your best look for a breakout. As the brand new user, I want to keep you focused on optimizing your chances of success. So when 3 of the 4 trigger lines get above the area of resistance, now we're in that yellow, that yield, that caution. I can take this opportunity. I can take this trend trade, but I'm going to be a little more careful, a little more assertive on my management, probably going to get to break even a little faster, maybe take profits a little quicker. But if all 4 trigger lines are through, resistance is in the rear view mirror. It now behaves as support. Guys, now my path is clear. We are bright green. You are good to go. There will be times when areas are stacked. You won't get that clear path. Hell, it might even last 8 whole minutes, right? And the reality is, guys, this is 90% of your day. You're going to find throughout 90% of the day that your rules just aren't met entirely. And you're going to get restless, and you're going to get nervous, and you're going to feel like you're never going to make money. 90% of your day, guys, the futures markets collectively trade about $220 billion an hour. That's what's exchanged. The S&P, which most of you trade, typically exchanges about $174 million a day. You have to find 400 of it to be a 6-figure trader. You don't have to be the first one in. You don't have to be the last one out. Guys, all you need to do, and let's go back to crude oil one more time. When you have momentum, when you haven't reached the next area, identify that fight. When you have momentum, when there's room to targets, go pinpoint that fight. Make this your mission in life as a brand new user. Give it 30 days. 30 days, and you'll start seeing everything. So is everybody good so far? I don't see any new names in here. I'm going to assume everybody's pretty solid. Momentum leads the way. And if I have momentum, then I make sure I have a clear path. And if I have a clear path, then I'll define my entry, guys. And my entry language is the most important phrase you can ever learn as a NinjaTrader user. I will use a limit order to buy or sell a pullback at an area inside of triggers. Learn this phrase. You'll call your shots. I will use a limit order. I will wait for the market to come to me. I will wait for it at an area. I'm going to wait for that push down in an uptrend, push up in a downtrend. That area, fib, yellow 1-to-1, mid-band, because areas are bouncy. And I want that area to be inside of those large triggers, guys. Those large triggers are going to show me exactly where my entry needs to come from. It's just a pattern. I'm going to use a limit order to buy or sell a pullback at an area inside of those triggers. So when the large chart says up, when the large chart path is clear, it's going to look just like that. Your small chart, where were we? We were right here. Your small chart is going to look something like that. We are going to buy or sell a pullback at an area inside of triggers. Guys, I want you to learn this phrase. So when I have momentum, I'm going to take our cheater circle off. When my path is clear, can everybody give me a why in the room if you understand these 2 very basic concepts, momentum and path? Because those are the 2 that are going to take you to the promised land. I have to look over to my small chart. Now, if I learn this language, I'm going to buy or sell a pullback at an area inside of triggers. I already know where I'm looking. These trigger lines from the top line to the bottom line, these will define exactly where the pullback's most likely to go. Most likely, not guaranteed. That one line, mid-band, inside of those triggers, is showing me the highest probability chance where that market is going to bounce and continue in the direction of the momentum and path. I will right click on a chart. Whoops, the market's in the wrong spot right now. And I will activate a limit order. And that limit order will be about 2 ticks above that area inside of triggers. Now I haven't even started a pullback, but I know exactly where my trade's coming from if it happens. And then the market goes up. Oh, and look at that. There's my reversal bar. And I already have my limit order waiting a tick or two above that area. And the market's coming down, and it's scary, and it's coming down more, and I'm nervous, and it's coming down more. And who the hell buys the market on the way down? This chart hasn't blinked. You still have momentum and path. And it comes down and down and down and down. And there's your limit order. We just got filled at 50. And it comes down a little more and a little more and a little more. Oh my goodness. Boom. And now they're headed in the direction of the trade. We're good. We're not always to the tick good. Guys, this is your entry. That is your pullback to an area inside of triggers when the large chart rules are true. That tail on the large chart, look at the box. That's the bottom of the push. We're pinpointing. We're predicting where that push is most likely to go. That's your entry. That's the trade that typically wins 70 to 80% of the time. Pretty freaking awesome, right? You're like a mind reader. You like have a crystal ball. So when the market is going down, when the momentum is strong, when the path is clear, before a reversal bar ever prints, guys, let me know that you see it. There is an area inside of triggers. There's one line. Takes all the guesswork out. But if you're remembering that phrase, I'm going to sell a pullback at an area inside of triggers. Boom. You're in the trade. It's already going down. You just sold the high freaking tick. What? It didn't get you? That's okay. Let's go back for them. Let's get them back in that trade. And then let's get back in line with the large chart. There's that tail. Guys, your pattern will look the same every time it sets up. It will be momentum first. You have to have room to targets. And oddly enough, that pulled right back to a mid-band in the retracement zone. And it went directly to trouble. That just happened in the market in crude oil. So you've got to learn this pattern. Learn the language. Pull back to an area inside of triggers. Pull back to an area inside of triggers. Learn how to put it together on the two charts. If the direction is up, I choose to look for long trades. If the path is clear, if the momentum is strong, if it has the potential, I'll go over here and look for a pullback to an area inside of triggers. Early November. Momentum, potential to break, pull back to an area inside of triggers. 2021. Momentum, potential to break, pull back to an area inside of triggers. 2022. Hold on. Momentum, potential to break, pull back to an area inside of triggers. That's my own personal trading this morning. That was a nice $300 shot. I teach it, but I trade it because it works. And all you have to do is learn the pattern. Prove to yourself it works. You'll find that you don't need more. That's NinjaTrader, guys. You ready to go to TradingView? Are there any questions about NinjaTrader? You guys want to do a couple live reads real quick and just make sure that we have the basic concepts? Large chart. First bar. Trend is up. Smalls are above the large. Space between. Good morning, Cav. Guys, this is momentum. Pull back. Look how it didn't get out of the retracement zone. Pretty cool, right? And now the small triggers are turning down, taking away our advantage of momentum. What's going on? What market is this? This is the S&P. Smalls are down, large are up. I don't have momentum down. Price reached the line, all the triggers are above. I don't have a clear path. Who cares about this chart? Don't get caught up in the fluctuations, guys. There's just no reason to do it. Trading view. 3 rules. That's it. 3 rules. Simplicity. Keep it basic. Keep it focused. Hell, the first 2 rules are the same 2 rules. Only takes 2 charts. That's it. Big chart, little chart. Your big chart on this platform is a 15-minute chart. And I don't know about you guys. I can get a lot done in 15 minutes. These bars can be huge. These bars can be small. They're too big to get much more than direction, momentum, and key targets out of them. So you'll notice on your big chart there are no large triggers. There is no background color. You have small triggers and areas, guys. Direction, momentum, key targets, and terminations. The large crowd. Small chart, 1-minute chart, will define the immediate strength using triggers. Triggers define strength. And it will show you precisely where the pullback to an area is. And it'll give you a rule to enter right at that area. 1-minute chart is just an entry chart. So your large chart only has small triggers. They're either up or down. Your small chart will have small and large triggers. Remember that connection. Separation is strength. You'll use that strength for momentum style trades. Areas on both charts. Areas are bouncy. Now this particular picture gives you the name of the areas, but what it also does is it tells you how they're used. Some areas, like divergence, are going to be targets or termination conditions, not used for entry. Areas like one-to-ones can be used as targets, terminations, or entries. Mid-bands can be used as targets, terminations, or entries. So it actually gives you the role as well so that you can use those triggers and areas to take the highest probability trend trade. So a trend trade is with the trend. Duh, no kidding, Mark. So you have to define the trend. Your big chart can't be trading into anything. You have to have room to targets. Your small chart can't be trading in anything. You have to have room to targets. And then you're going to buy or sell a pullback in an area. Sounds familiar, right? Little different entry on the trend trade. But essentially what this is saying is, hey, the market's going this way. There's nothing in the way. Let's pinpoint the fight. That's it. Keep it simple. Direction is defined with the small triggers on the large chart. They're either up or down. That's it. They're either up or down. If they're up, the plan says go up with them. If they're down, the plan says go down with them. Sometimes you can't tell if they're up or down. They were up, but they look like they're going to go down. But then the market goes up a little bit, and then they look like they're going to go up. Guys, when this happens, I have found that the best thing you could ever do is wait for that bar on the 15-minute to finish, whether it's 1 minute or 14 minutes. And then you'll know exactly which way those triggers want to go. So either up or down. If you're unsure, it's okay to wait. Rule number 1 says don't trade into stuff. Don't walk into walls. Don't try to go through a door that's closed, which means that you have to have room to targets. If you don't have room to targets, you're hoping that Mini Cooper makes its way through the brick wall. Give it room to take a running start. So if price is down here, make sure trouble's far away. That's rule number 1. It's really pretty simple. Rule number 2 is the same thing. When I enter a trade, there shouldn't be anything in the way. I shouldn't run headfirst into a mid band, into an outer band, into a zone, into a one-to-one. I should have room to make money. And if I don't, it's okay to do nothing. And once I have defined the trend, and there's nothing in my way, I've got that dag-nabbit, it's going without me feeling again. The market's up here, and I'm like, shoot, what am I going to do? Well, here's the pattern. There's the fight. Happens every day. Once the small triggers go down, when the large chart triggers are up, the fight is on. Look low. Look for an area. Look for mid-band. Look for a one-to-one. Look for a zone. Look for something bouncy. And when the market gets there, this is where the methodologies differ. Your entry is a reversal bar, an up bar that finishes on the weak side of triggers, on the correct side of triggers, which means both corners of that up bar are north of these down triggers, because this is where reversals typically come from. And guys, all we want in a trend trade is to get in line with the large chart that is screaming up. And we're embracing the little fight on the small chart, but our goal is to continue up with the large chart. You will pinpoint right where that fight is most likely to be lost. Those two corners above the small triggers is where reversals happen. Hell, even if your rules aren't met, when everything is going up, those two corners below the small triggers, that's what sets off the retracement. Eventually, you guys will start finding shorts to get to the long, but until that happens, that's your pattern. First, the market must say up. Then there has to be room to targets on the big chart. I'm going to tell you right now, if there's no room to targets, I don't even look at a small chart. I believe in those targets. I believe in those termination conditions. When it's up, when there's room, small triggers roll, begins the fight. Where's the fight most likely to go? Down to something bouncy. Mid bands, one-to-ones, and when it gets there, it's the two corners above the small triggers for entry, guys. It is the same pattern every time. I wish it was more complicated for you overthinkers. I wish there were more moving parts, but there's really not. It either is or it is not. You guys see how right here they didn't make the area and they faked you out and all of you got in and said, yes, here we go. And then they came to the area and it bounced. Guys, areas are bouncy. They know about these areas. They created these areas. That's your best of the best entry. When the triggers are down, when there's room to trouble. Can't stress this enough. If the small triggers roll up, your job is to just circle, put a box. This is where my trade's coming from. I need a pullback to this area. I need a down bar with two corners that finish below the small triggers. That's where reversals happen. That's what sets you in the direction of the large chart. Patience is a big part of what we do. Waiting for the market to give us an entry. Let's see if we can find a good trend trade look. This is a great example. Not really room to targets, but when everything says up, right, there's your pullback, there's your bounce, there's your continuation. This one probably didn't fit the bill, but I guarantee there was at least one that did in here because you guys are posting them. Triggers are up, pull back to the area. There's your close above. Might have gotten you. There's your second close above. So if this one lost, and trades do lose, there's your second chance. And that one did pretty darn good. So, guys, this is TradingView. TradingView and NinjaTrader, they're very different. They are very similar, but it goes off of the very basic premise that when a trend is established, and this is a great example on the S&P, even if there wasn't an entry, where was that big move? I just saw it. We'll just do this one. When a trend is established, there's almost always a fight. It doesn't always fit your rules, but guys, that's the pattern that we rely on. We rely on the idea that when the people in charge tell us which way we're going, when the people in charge are pushing with strength, when the people in charge have nothing in the way, we are going to love on the small crowd and we're going to pinpoint right where they're most likely to fail. That's your trend trade. This trend trade, whether it is NinjaTrader or whether it is TradingView, this trend trade is designed to get you focused on advantages. That's it. A lot of people feel shackled to this, oh, the KISS plan. The KISS plan doesn't give me enough opportunity, Mark. I could never make enough money with only high probability trend trades. I could never make enough money with a trend trade. Mark, what are you trying to do to me? Guys, I'm trying to get you focused on advantages. These plans, whether it is NinjaTrader or whether it is TradingView, it's a stepping stone in your learning journey. That's it. It's the beginning, right? It's second grade math. Let's do that. It's second grade math where you learn to take basic whole numbers and add them and subtract them. And that's it, laying that foundation. Learning to read the indicators. And the trades in the plan are designed to optimize your chances of success, which means I am your grandmother swatting your hand away from a hot stove, saying, don't do it. You're going to hurt yourself. Through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. I'm going to tell you guys, when I hand you the plan, I say don't touch the hot stove. The reality is that you have got to touch that hot stove so you learn how to not do it, right? You've got to stick that key in the light socket. You've got to mess with that dog that's growling at you, guys. You've got to feel a little pain in the market. You've got to take some losers to learn how to embrace the advantages and really trust them. And I know that sounds counterintuitive. Mark, why on earth would I want to take losers? Why would I want to not win? Because, guys, winning is a percentage of your day. And when you have the high probability, when momentum, clear path, and entry are there, guys, you have the potential to win up to 70 to 80%, which means that you have the potential to lose up to 20 to 30%. Losses are a normal part of a positive equity curve. Losses are a cost of doing business. But what you can do, since you can't control the wins or losses, is you can take trades that you can prove win more than they lose. That's the edge. That's the advantage. And then you just let probabilities take over. So if you, for whatever reason, decide to listen to the plan and you focus on learning momentum first, you'll always take trades where the market is difficult to stop. And if you take the time to learn what a clear path is, you'll at least go into trades with confidence, knowing that with all that momentum and nothing in the way, the market's going to be hard to stop. Now, there's a lot of you in this room that take trades with just those two advantages, and you're going to see charts in the room where people put JTFI, jump the fudge in. That's it. I had momentum. There was nothing in the way. I jumped the fudge in. Pete, fingers crossed. Nope. Dang it, Pete, you let me down. Pete is the king of the jump the fudge in. There we go. When the momentum is present, rule number one is perfect. When there's absolutely nothing in the way, jump the fudge in. That's what Pete does. And Pete says it's just momentum. I know there's typically a fight. I'm going to jump the fudge out. I'm going to make a little bit of money. And then when this trade is done, look at that. It turns right into the same trend trade that we did as a class. And look at his entry. He sold the high tick at the mid band, and he made a little money. And then he sold it again, and he made more money. And everything that we've just talked about, he did right here. But because he understands this trade so well, he also leaned on momentum and path and found a way. And that's what we're going to do, guys, because you're in control of the entry. Knowing what's working for you and against you will help you make good decisions on whether or not you enter. It'll help you understand how aggressively, how assertively you need to manage the trade. Does it make sense to hold for bigger moves? Does it make sense to get paid quickly because all of the advantages aren't there? Love Big Mo. Amen, Pete. So I'm not here to shackle you. I'm here to lift you up and teach you to read indicators. And man, this is a small class today. So that's my first hour. True story. It's the same hour every day. It's the same hour every week. It's the same hour because repetition creates recognition. So what we're going to do in the second half, 2/3, we're going to do two things. The one thing is that we're going to look at the charts that are posted. So if you posted a NinjaTrader chart, this is what I ask of you. I want you to describe the momentum that you saw. I would love it if you draw an arrow and talk about why it's momentum, because that'll help reinforce the learning of the rules. I want you to tell me what you felt about the path, and I want you to write the recipe. 3 triggers are through. It's only the potential. I may have to manage. Guys, if you write that, there's no guessing. You're committing to memory what the look means and exactly what it means to you. And I want you to define your entry. There was the pullback to an area inside of triggers because of the divergence on the small chart with the potential to break. Got in with a reversal bar, half off at trouble because it's a medium probability trade, and then a trailing stop on the way up. And guys, if you do this every time, you're doing 2 things. The first thing you're doing is you're making sure on what it is that you see, right? You're literally writing a recipe for success. But you're also saying, Mark, this is what I see. I need that private session. I want to make sure that I'm reading my indicators correctly. I want to make sure that I didn't call it the potential when it was clear. Or even worse, I want to make sure I didn't call it clear when it was only the potential, because that affects management. And if you're on TradingView, I need you to do the same thing. Where is my TradingView annotation? There it is. This is what I want you to write for me. I want you to tell me the direction of the small triggers, because that defines trend. I want to make sure if you say you're taking a trend trade that you're actually trading with the trend. I want you to talk about whether or not you have room to targets. I want you to tell me where you entered and why. Small triggers rolled up. So I waited for the higher area. I waited for the close below. And you're writing a recipe for success, guys. You are literally describing exactly what has to happen before you get into the market. And that thought process, my gosh, I love this. You ready? You better be, because here it comes, kids. For the brand new user, no separation, rule 1 not met. That's humongous. Rule 1 not met. You know rule 1's not met. That's an avoidable loss. Does everybody see it? No separation between the small and large, no matter what your opinion is. Rule number 1's not met. And I can even say there was absolutely not an area inside of triggers. I don't even have to see a small chart for that. Price reached an area. None of the triggers broke. Rule number 2 is not met. Rule number 2 is not met. Rule number 2 is not met. 3 times. That big ugly bounce could have taken you out of a position and taken your money. Price reached a divergence high, even with momentum. Rule number 2 not met. Price reached Fibonacci support. And in the moment, rule number 2 is not met. Now I'm going to let you guys in on the most important lesson you'll ever get in day trading. Are you ready? That's your $300 loss, based on the opinion that that area or that market should continue up. Whoops. That market should continue up because of your opinion. Another $300 loss because it was your opinion that the market should continue down because of that momentum. And again. And again. You guys see it? Do you see what I'm doing here? That's 4 times that the rules weren't met that the average user will take a trade. I'm sorry. 5 times where the rules aren't met, where the average trader will take a trade based on their opinion, not their rules. Trading doesn't have to be like that. Because if you are patient, if you wait for momentum and path, there is opportunity. If you wait for momentum and path, there is opportunity. If you wait, even the tail end of momentum and path, there is opportunity. And guys, for new users, for old users, for experienced users, this $1,500 has to be erased with your winners, which means that your winners don't go into the positive side. You are $1,500 in the hole on trades that you never should have lost in the first place. Avoidable losses destroy accounts. You now have the ability, yes you do, to erase avoidable losses. Now you can't erase losses, but you can erase avoidable losses. Those triggers are up, but I think the market should go down. Son of a bitch. Now those triggers are starting to point down, right? But I won't know for 6 minutes. If this market ricochets up 50 points, those triggers will have never rolled. I don't have a clear path. I can trade all the opinions I want to trade. Or I can patiently wait for the correct trade, guys, and that's going to be the hardest thing you ever do, is sit on your hands and do nothing. That's my first hour. What do you guys think? Same as yesterday, right? Yesterday in this room, after we did chart review, we looked for high probability trend trades. Yesterday on NinjaTrader, we only made $300. We only found one trade during the course of class. On TradingView, if I'm not mistaken, we probably did close to $4 grand on trend trades. I only trade trend trades, guys. There's not a lot of red. That goes back to the 9th. Today's the 15th. Excuse me, I'm so sorry. There's not a lot of red on my P&L because I just don't bother. If my rules aren't met, I don't bother. I go find something else to do. I send my wife little lovey texts and hope that she'll come home and kiss me on the mouth one day. Look at that. You guys all thought they were going down, but once the market came back up, they don't look like they're going down anymore, do they? Let it tell you. We'll know in 4.5 minutes which direction they want to go. But right now, it's not down, which means that I'm not looking for a close below triggers. But I don't have room up. I'm not looking for a long trade. I'm just sitting on my hands, guys. I'm doing nothing. Sit and wait. Amen. Hardest thing you'll ever do. Hardest thing you'll ever do. Nice job, Cav. That's a good feeling, isn't it? Gold med on the PA, switch to sim. And then you've got to get over the thing. I did it yesterday. I hit my goal. I've got a PA account too. Hit my goal and went to sim and made like another $3 grand on sim. And I was like, damn it. But rules are rules. And my rules say this is your target. Shut down when you reach your target. And then all I did was become a better trader. So I bought a new evaluation. So when I hit my goal, I can just build another one. All right, guys. That's my first hour. I'm going to go walk around for a few minutes, get a drink of water. When I come back, we're going to start with the chart reads. We're going to get through those quickly. And then we're just going to watch the market, and we're going to see if rules get met. And if they do, we'll pull the trigger, have some fun. And we won't do it to call trades. We won't do it to tell you when to enter or exit. If the rules for the KISS plan are met for educational purposes, I will execute said trades using the plans for the execution. I'll see you guys in 5. You ready? Second half. Halftime's over. We saw Shakira. Now it's time to get back to work. Let me click on the links that have been posted this morning. Make sure I don't miss any. Guys, do me a favor. If I ever miss one of your pictures, just tell me. I never mean to. Remember that if you guys post at midnight and there's a lot of conversation in the room and you're hoping that I get your midnight post, there's a good chance that I'll miss it. So if I do miss it, my sincere apologies. I will always give you the feedback that you desire. You just may have to repost for me. Man, you guys gave me a few of them in here. Let's see what we have. Victor, Boaz. I bet that's a trend trade. All right. Here we go, guys. We're going to get going. Wayne, we got you from last night. Man never sleeps. The trend is up. He's in the transition side of the triggers, so it helps dictate his management. He's got room to targets. Don't forget those one-to-ones in the VWAP, Wayne. The market pulls back to the zone, closes above, and it's really tight into the mid-band. You guys see that? Large chart's perfect. It's tight into the mid-band. I mean, it definitely is. Got about 4 ticks, and the mid-band creates a bounce. And now some of you are going to be like, holy crap, I'm about to lose this trade. And Wayne says, man, I've got all the advantages. There's nothing in the way. I'm coming from support. I know where my targets are. I'll ride it out. My stop's in the right spot. And guys, that's one of the things. If you choose to trade with very little room, you've got to make the decision. Do I exit? Do I manage? Right? Do I add on when it pulls back? And Wayne, this is a great hold through great conditions and nice profits. Really well done. Triggers are up. Transition. Clear path. Pull back to the zone. Perfect entry. And even on the late entry, you still made money, Paul. What a great trade. Do you guys see it? The trend is established. There's room to trouble. Paul doesn't jump in up here. Paul says, man, my entry comes when it pulls back to the area, but it didn't close above. And it didn't close above. And it didn't close above. Didn't close above. And then it finally gives them the perfect low-risk entry. And off it goes. Great job, Paul. Little late on the entry. But great trade again. You guys are killing it. It's almost like you have a plan. Everything is rolling. And Pete has the potential to break. And he jumps the fudge in. There it is. Jump the fudge in. But Pete, you didn't have momentum. Do you see it? You didn't have separation between the small and large. You didn't have the momentum to push. And what does it do? It pulls right back. And you're like, wait a minute. That's the perfect entry. And sure enough, it goes down. But that's that one, guys. If you're going to jump in, didn't really have momentum. Yeah. I don't know if that's big enough for the people in the room to read. So I will say it out loud. But this is the cool thing. Pete takes this trade because it could go. But Pete knows full and well that if it doesn't, that's the most likely outcome. And it's pretty awesome. Pete doesn't panic. Pete just adds on. And nicely done, Pete. Everything says down. There's the first trade. Momentum and path. Pull back to the area inside of triggers. You got your 10 ticks and then the rest off. And that third divergence in the same price range, guys, that's your only small chart termination. So that was a pretty awesome exit, Pete. Nicely done. Perfect trend trade that ultimately fails, and you still find a way to make money on it. Good job. It's the Pete Show. Potential to break. Pull back. Sniper entry. Money, money. Great job. Sniper entry. I love it. It's just a trend trade, guys. I wish that I could make it more complicated for you. I can't. Do you guys know that I had a guy call me once and say, Mark, 3 rules isn't enough to make money? It takes more than 3 rules to make money. To which I replied, respectfully, poppycock. Everything is screaming up. Pete gets above trouble and he jumps the fudge in again. And when his jump the fudge in doesn't quite work, it turns into the perfect momentum trade where he adds on. And there it is. I mean, come on, Pete. Do you ever get tired of winning? Doing the same thing over and over? Does it ever get boring? There's that 3 divergences again. For Pete's sake, I see what you did there, Phil. 3 divergences in the same price range can terminate a trend. Let me show you something cool. On a small chart, it can terminate a trend. When you see it on a large chart, egads and little fishes. That's a good look. And Pete says, hold it. I see this look. I recognize this look. With odds favorable momentum, I'm going to jump the fudge in and make money. Momentum first, then path, and then find a way. JTFI. I said that one day joking, and you guys have latched onto it, which really, it makes me happy. But we didn't say fudge, did we, folks? We used the F dash 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 word. All the momentum, clear path, jump the fudge in, had an add-on waiting in case it failed, but it never did. And there's the money again. I don't see any new names in here, but if you are new, or maybe you're just struggling, I don't know, maybe you're like, man, I wish I could find something that's consistent. Let it start with momentum and path. I think you'll be amazed. I think you'll be absolutely floored at how well that works for you. All the momentum, nothing in the way. Pull back to the area inside of triggers. Money again. Sniper. Selling the high freaking tick. I can't make this up. This is you guys doing it. This isn't me going, oh, let me find a picture and I sure hope it lines up with the plan. That's the one that we did as a classroom today. Pete caught it twice. Nicely done. Pete, you get the microphone tomorrow. I'm driving to Sarasota. With no momentum up, not getting caught in the rubbish. I don't have momentum. I choose not to trade. Jen, I love it. That's hard to do, isn't it? But I think it's going to go up. But I saw the 3rd divergence, so I hope it goes down. I will. He is going to beat my tail in golf on Saturday. Great read. Great patience, Jen. I would love to say that I'm going to get him, but he's a better golfer than me. It aggravates me. And then Pete says, you know what? Let's do it again. Let's sell the high freaking tick again and make more money. Pete, at this point, it's just boring. We get it. Momentum and path. Pull back to an area. It seems to work more than it doesn't. High tick. High, almost the high tick. High tick. I mean, come on. I think it's amazing to me. Guys, if you're not making money with the software, it's you. There's no doubt in my mind. If you're not making money with this software, it's because you're having a challenge that we need to work through. Post in the room. Let's find it. Strong side away from zone. Let's see. There's your entry. Triggers are down. You're still in the zone here. Who was this? Is this Wayne? Who is this? Price pulls back. Stop at previous pivot. Close below. Entered on the way away from zone. On the way down. Trailing stop was behind the pivot. So there's your pullback. No areas. but a close below. And then you let it break below the zone and catch it on the pullback to the smalls. Nice. Posting cures all evils. I agree with that. Great trade. Wayne, this is you, right? Nicely done. It's weird seeing you take trend trades and not just momentum trades. And sure enough, zone to zone, everything says down. That was your pullback. And actually, this was your pullback. And you just caught it on the way down because you can't fight triggers if they're going your direction. Nicely done. You guys make me so proud. Strong-sided triggers. SOT. I don't know what that means. Momentum. Oh, SSOT, strong-sided triggers. This is Wayne training me for his language so he can start putting SSOT on there. Thanks, Wayne. Never got a pullback, I don't believe. Close below, but not really a rule because there had to be a pullback up here somewhere and it was directly into trouble. And then it comes down. And then with all that momentum, there's your momentum trade. Pull back to the 1-to-1s and down to trouble. Nice. Late entry though, Wayne. Super late entry. If you're going to take the momentum style entry, it's right there at those 1-to-1s. That's your low risk, high yield, high profit entry. Nice trade. And clearly, there's something to it. Nice trading, Wayne. Thanks for sharing in here. A lot of you guys don't know this. Wayne holds the record for the most pictures posted in this room. Paul, or who was it? Pete said, posting cures all ails, all evils. Wayne, when he was really dialing in, posted 77 pictures in this room. In one day, one morning, I woke up to 77 pictures in this room. Wayne received feedback on 77 pictures that day. That's our commitment to you. If you have the courage to post, I will give you everything in my power to give you everything that I know to help out. Trend trade. Why fix what's not broken? The trend is up. It's in transition. You'll manage. Space to the next area. All right. So I was looking at this one, Victor, and help me out. Looks like you do have the zone, right? So it hits the zone, closes above, and it doesn't go. Guys, that's a good look. And I'm not sure why you weren't stopped out. You made the decision to put your stop much further down because it hit the next zone. And then it went and did the same trend trade, right? So you said, it's only 6 points. I'm going to give it some breathing room because it's an amazing look. And guys, that's your right. The taut stop is below the pivot low. Victor made the audible. He said, man, this is a great look. But sometimes they dance. I'm going to give it some breathing room, and I'll make some money. Nice job, Victor. Triggers are up. Transition. Nothing in the way. There was your pullback to the 1-to-1s. There was your close above. There was your entry. It was late. Paul, do you see it? You're taking that late. You got that little hesitation. Not a huge deal, but it's about a $100 deal. 40, no, maybe it's about a $50, $60 deal, right? But plenty of room. Great profits. Nicely done, Paul. You're kind of settling in. You seem to have gone back to simple. And I don't know if that's true or not, but it sure looks like it. And you're wearing it well, if I may. So everything's set up, pulls back to, Victor says there was an area there, and guys, that'll happen. These areas will shift, close above, and I mean, that's just the easy one, isn't it, Victor? That's the, I don't have a care in the world, let's have some fun. What a great trend trade. And if I'm not mistaken, you qualified more accounts with just trend trades today. Is that right? Qualified more accounts in Nexgen Pro Trader funding using nothing but the trend trade. Can I give your secret away, Victor? When you were finding success with the trend trade, you decided at some point that even though it passed your evaluation, that even though it got you into semi-live, that even though it was a constant producer for you, that you were too damn smart for that trade and lost a few semi-evaluation accounts trying to find all of the money instead of the easiest money. And then recently you had the revelation that you just don't need it. And now you're back on that winning path with nothing but trend trades. Guys, there is such a huge lesson about trading maturity there. Great job. Great job. That makes me so happy. All the momentum, 3 triggers through, did not take the trade, 2 divergence, should I after up bar? So that is the general rule of thumb, Boaz. 2 divergences on a high probability trend trade is pretty detrimental. On a medium probability, it's typically a little worse. So if you wanted to take that trade, absolutely, that up bar is your shot. That up bar is your entry to go with all that momentum and the potential to break. And you even had a market flow signal too. So it's a great read. Nothing wrong with avoiding if you're unsure, but absolutely, that's a pretty good opportunity. Your risk is established, and you've really just got all the room in the world to get there. Nicely done, Boaz. Good question. All right. Paul from yesterday, 30 to 40 minutes. We saw that one. Oh, maybe we didn't. Triggers up, transition, perfect entry. You didn't enter because it was the end of the day, and that's fair, Paul. You can't enter a trade if the market's closing, right? But that's the pattern. And when it opened back up, it just completed the pattern. Good job. 4th account is 750 from passing, all trend trades. Victor, I want you to go back to Trustpilot, Nexgen Pro Trader Funding. Leave another review. Tell them that with Nexgen's plan, you're killing it. Well, it's your plan now. I'm getting there, Jen. I'm getting there. I've got to go in order. Color of the bar doesn't matter. Sorry, let me get you the good one. Color of the bar doesn't matter so much that I made mine gray, Jen. Couldn't care less about the color of the bar. On the large chart, or on the entry chart, Jen? The rules say up bar to get you into a long. Uh-oh, Victor, you're in trouble now. You're in trouble now. Jen, up bar that closes on the correct side of the triggers. Because Victor waited for the close, doesn't matter what the next bar is. His entry is going to be on that bar. Does that make sense? His entry was perfect. Fit the rules, up bar, close on the correct side. But because Victor is a stickler for the rules and says, I can't get in with 20 seconds left, I have to wait for this bar to finish, which puts him in. And then the next bar says, Victor. But ultimately, it does everything it's supposed to. And you'll see that a lot, Jen. If you're actually waiting for the closes, who cares? You're already in. You're already in at that point. You're either going to win or lose. But the up bar gives you a little more of a fighting chance. Good question, Jen. Good question. Bruce T. Welcome back. I've been away for a while. Is there only one Discord channel? I thought there were 2. One for regular software clients and another for prop firm clients. I have lost my 15-year designation. Have I been a bad boy or done something wrong? Can you get me back on the 15-year client risk? Well, Bruce, there's only one Discord channel. Over here, whether you are prop firm or whether you are Ninja Trader or whether you are Nexgen client, that's all the posting. It's for both of them. We don't have the manpower to start creating multiple Discord channels. We just couldn't possibly police them like we want to. And then you lost your 15-year. Did I read that right? You lost your 15-year designation? Bruce T, 15-year client. Who stays with a company for 15 years? Next-gen clients. That's who. That's who. And then Bruce, my friend, you are fixed. You are a 15-year client. Did that answer everything? And I went through while I was flapping my gums and put you back to 15-year. You may have to reboot. No, you don't have to. Look at that. Instant gratification. Good stuff. 15 years, guys. Let that sink in for a second. 15 years with an indicator company. How many indicator companies do you know that have even been around for 15 years? 10 years. I love that. I get excited about that stuff. 10 years, 15 years. Why? Because it works. You've just got to learn to work it. You've got to learn how to read these indicators. Make good decisions. Termination, 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 termination. Just gotta wait. Amen, Jen. Amen. That's it. Sometimes there's nothing to do. Sometimes you just gotta sit on your hands. Do nothing. And Jen, there's your picture for this morning. He said with a big smile on his face, being playful and smiley. Triggers down. You always say with momentum. Was there room to trouble? I hope so. There's a pullback to an area. There's your close below. And it got you. Let's see. In at 75. So, all right. And this is hard to tell after Papa. Was your entry inside of this zone? It looks like it probably was. That 75 was still inside of the red here. I'm just playing, Jen. It's hard to tell after the fact. It was tight, and tight got you, didn't it? So when you're in these zones still, see how the market is doing that little flatline thing, Papa? This is a lesson we all have to learn. You really want your entries to come from below that area. One of the things that I'll do, and I'll show you exactly what I'll do, is I'll take my trend line and I'll put it right at the bottom of that area. And now you can see you were just right into it. And I think that was it right there. And it's just bouncing and it's ricocheting and they can't figure out what the hell they want to do. So typically, really letting it come from below that area is going to create a bit of an advantage. And it still may go down, right? But we want to see it break a little bit and then we want to see it pull back. That was one of the hardest lessons I had to learn. Because I'm like, well, it's resistance and I'm going down anyway, right? But these edges on these zones are freaking amazing. And I'll show you what I mean. You'll watch price just funnel inside of them. And it's weird. I'm looking for a good example of it. That's a pretty good one, where they just can't seem to get out of it. And look at the tails. They try to break it and can't. And they try to break it and try and try and try and try and try. And man, support's holding. But the same is true about this. And you start defining these ranges. And that's a good lesson, Papa. Make sure that that rule number 1 is met, and it really will save your bacon more often than it doesn't. And see how they just can't get you? Not yet. Good post. Thank you for that. All right. Ah, I love it. I was about to go do some chart reading, but here comes Miss Trina. All right, Trina. Haha, smiley faces. Down, room to targets, transition, pull back to the area, close below, down barge in. Room to trouble, out at trouble. Trina. Love it. I love it. All right. You guys ready to play Trade Police Witch Hunt? I know Trina's trying hard to follow her plan. Triggers are down. Trina's only choice if she's following the KISS plan is to go down with them. Trend is defined. Trina, from wherever she enters, around 15, has room to get to trouble. Rule number 1 is true. From where Trina's going to enter up here, she has room to trouble. Rule number 2 is true. Trina didn't just jump in. Trina said, you know what? I'm going to let the market fight. But I'm not going to just jump in. I'm going to wait for the close below. And then I'll enter the trade because that's what the plan says. And Trina says, I'm in the transition and that's big chart target. I'm going to get paid right at that target or just above it. And Trina, that is such a great trade. 14 points, $280, and it happened in about 2 minutes. And that is the KISS plan, 100%, Trina. So, virtual high five. I know that was your commitment, was going back to basics, and you just did it perfectly. Now, with all that said, let's look at the next one. Triggers are down. Too much risk. And you're also right at the edge, right? You're right at that edge. Still support. I love it. I'm not willing to put that much on this trade when there's only 9 ticks. And what would the risk have been? From 69 to 96, $600. And you said, it's just not worth it. You want to see something cool, Trina? Because you and I are both in the Cool Kids Club. I sent that one to my brother this morning. I'm not putting 30 points of risk per contract on a trade. So it's just not my money. That was at 8:05 this morning. And man, it went. That was the beginning of 32 flavors of up. But it wasn't mine because I couldn't justify that much risk for that little reward. And Trina, what a great picture. Guys, that's your right. Your right is to not enter a trade if it's too much risk and not enough reward. It's your right if the advantages aren't present. Nobody can make you enter the market. Great job, Trina. And look at this. Man, they're trying, aren't they? They want to go. They just can't seem to figure it out. This is crude oil. I've got momentum, but I've only got 2 triggers through this area. I've only got 2 triggers through this area. And guys, 907's not even broken yet. Do I have any suggestions? Wayne, I don't give suggestions. You know that. I give feedback. We have to be very specific on how we word that. Triggers down. Taking a trade inside of a zone, Wayne. is notorious for creating problems. True story. So that little bit of awareness, but let me go to the other side of it. You're coming from a termination, the trend is down, the triggers are strong, and you waited for every indicator to be pointing the same direction before you entered. So while you're trading inside of a zone, while it's not really a true trend trade, you stack the deck by having every indicator pointing the same direction. Does that make sense? There was no area for a trend trade up here. There's your close below directly into trouble. And I can't see it if you got a full bar below there or not. That's the one thing that I can't see. If this was a full bar below, then that was your pullback. And what I said, and Wayne, let me do this real quick, because I think this is a good lesson. I don't have a rule away from zone. And your rule for away from zone, Wayne, is typically with momentum. And the small triggers are on the wrong side of the large for that. Can we agree to that? Your momentum trade is the away from the zone. That's where that language comes in. I want to make sure that I've got your plan right, because it is different than the KISS plan. Your away from zone is like that, where it comes up and now it's coming back down with odds favorable momentum. This one shows it. Don't diddle in the middle. Now, Wayne, you can't ask me and not answer me. I need to know. That bar right there, full bar below this zone. Whoa, that's a huge font. That full bar body below the support made it resistance. Does that make sense? Yeah, but isn't that your momentum trade rule, Wayne? If I'm wrong, let me know. But I thought that trading away from a zone, that was your momentum trade rule. That was with strong triggers, I'll let it retest and then pull away, and then I'll trade away from the zone. And man, I reserve my right to be mistaken here. And I'm not knocking the trade. But now that this is resistance, that's your pullback to resistance, right? And you're catching it on the way down. You can't fight small triggers if they're in the direction of your trade. I'm not saying anything's wrong, Wayne, but I'm saying it's not a momentum trade. Right? 59.43. And respectfully, price wasn't below the triggers, below the zone. I see your entry. With all due respect, that's a fib. It's not, right? It's not a trend trade, really. It is. It is a trend trade. It's a super short trend trade. And since there were no small triggers to fight, you took the entry. I like the trade. When this support became resistance here, when the market pulled back to that resistance and then closed down, you took the down bar. But it doesn't have to be below the triggers because the triggers are already down. It is. It's a super short hit trend trade down. Does that make sense? And I think it was language that got me on this one because I couldn't see that area had broken. Cool. I love it, Wayne, because when you post stuff that I don't completely understand, you're so open to conversation. And sometimes I'm wrong and I learn something. And sometimes we uncover something that makes us better. And I think that this entry, Wayne, is something that a lot of people could latch onto, because if the triggers are down, you can't fight them. So you don't have to wait for it to get to below the triggers, right? Because they're already in the direction. That's the whole methodology. Don't fight the small triggers. And I think that that's a very subtle thing that hopefully we just brought to light for a lot of you in the room. I can't fight something that's going my way. If I'm swimming with the current doesn't push me back. Good stuff. And then Wayne, this is a technical 100% momentum trade. And this was the feedback that I had. Are you ready? When this is perfect, and it is, your entry is right there at 46.19.4, right at the one-to-ones, which means that there's $130 minimum extra risk on this trade. And on a 3-lot, there is almost $400 less profit. And I know that momentum trades are a little scary, and you like for the market to start to break away. But we talked about it yesterday too. You knew you were late. Right on. And there was still plenty of room to make money, Wayne. Still plenty of room to make money. But I like to point that out. And the HVA is there too. It's like a double whammy. That's the get in at the area look, without a doubt. And what's cool is you still made 140. You made 140 per contract. Could have been 270. Might have been an earlier day. Get you out to the tracker up in the sky. Great trade though. I love this look. When everything says down and nothing in the way, that level of momentum, egads, don't hesitate. Rock out. Have fun. Great trade. And it was the large triggers, yeah, which is more of a ninja trader thing, but absolutely. And I love it. Gold met for the day. Gold met for the day. Tesla nerd. First question is, why don't you have my charts? You know they work. I don't know what market you're talking about, so help me out with that at least. Let me know which market you're wondering about and which platform you're wondering about. And then we'll go do the research. Big triggers, wide like scissors. Pull back to an area just above the retracement zone. Easy money, Cab. Nice job. Easy money. Nice trade, Cav. All right, Tesla nerd, let's get you some answers, man. NASDAQ and trading view at 10:30. Actually, we'll just do that. At 10:30, what direction are the triggers? They're down, right? Only short trades. There is absolutely no room to go anywhere. Does that make sense, Tesla nerd? So that's the first part. Some Nexgen users will say, if I can't go short and I'm at a termination condition, I'll see if there's an opportunity to go long. Well, termination condition holds. Small triggers get above the large triggers. See that beautiful green line that our market flow indicators produce? That's an HVA trade long. There's rules for it. First, it's a termination. Then the triggers roll. Pull back to that green line. Buy it like it's going out of style. Ride it up to trouble. That's how you catch tops and bottoms with the software. Pretty cool, right? Let's look up top. 9:30. Is that what you were wondering? First, it's a termination. Small triggers get below. This one didn't really set up the HVA trade. Not the way we'd want to see it. I've got a cheat code. When this white bar prints right off that termination, when these small triggers are down, when the next bar opens below the high volume area of that white bar, it's sell city, baby. 100% catching the top. Guys, there are counter trend trades. Ha, you just got unlimited lives on Contra, Phil. There are counter trend trades. There are momentum trades. But if you learn the super simple, basic, easy trades, they're easier to catch. I think we're just a couple years apart, Phil. Did that make sense, Tesla nerd? Have you done your demo with us, or are you just hanging out in the room? I can't believe you're not an owner as long as you've been in this room. I can't believe you have not bought software yet. How could you sit and watch this every day and not want to be a part of it? As he puts you on the spot, right? I'm not a salesman. That's not my job. But I'll tell you what, I love it when people tell me this doesn't work. I won't get it. It's not worth the investment. Yeah. You have an account in Nexgen? That's what I'm talking about. Oh, that's right. You're in the funding company. What platform are you using? You're using, we talked about it once. I don't remember. You are in TradingView. You just don't want the T3 indicators, huh? Not yet? You'll get there. I love that you hang out. I really do. I think it's cool when you guys hang out in the room, especially when you're in the funding company. I mean, there's a lot that can be taken out of the room, I think. Had surgery, waiting a minute, no worries. I hope everything went well. I've had a few of those. I've had a lot of those. It's hard to trade after surgery. For me, yeah. I've had 2 spine fusions, knee surgeries, wrist surgeries, elbow surgeries. I'm like a 1927 car. Look at that, guys. Triggers never went up, did they? Look at that drop. Holy wow. Holy wow, Batman. I love this stuff. Let's get off of crude oil. Let's look at the S&P. Are they going to break that zone? Are they going to break these chains of love? I don't know. We'll find out. We'll find out. My triggers are down. My momentum is strong. My path is not clear. I choose not to go short because 60% of the time it works every time. Termination conditions are the Sex Panther of the trading world, just so you guys know. It's got real bits of panther in it, so you know it's good. Yep, I am an HR nightmare. So guys, if I don't have rules met on NinjaTrader, uh-oh, my triggers are down. I got room to trouble. What do I need? I need to call a shot, right? I need to pull back to an area and a close below triggers. The challenge with that particular scenario is there's the bottom of my zone. And we just reached trouble. Dang it. All the momentum, 3 triggers through, pull back to the area. It's just on the other side of triggers. Tiny little profits add up. Tiny little profits add up. 34.65. That was my address in high school. That's a big number. It's not really my address in high school. I don't think. No, it wasn't. Pull back to area so we can go after close on the right side of the triggers. Amen. What's the only challenge now, Victor? We're right into trouble. Now rule number 1's not met. It's not even, don't even call it a strong termination, Phil. It's a no more short scenario for the time being, right? I don't care if it's a strong, I don't care if it's weak, I don't care if it has asthma. Price reached an area, I don't have room to make money. It's just not my trade. I try not to add words because words create opinions, right? It's a strong. Well, shit. I might as well just go long, right? That doesn't seem like a good idea. And then here is the market proving me wrong. I guess that's why you shouldn't trade into them. How do I close that out? So as the brand new user, that kind of worked out, didn't it? Up, and there's that pattern that says that could be a bottom. Let's just keep breaking rules and see what happens, right? Strong triggers down, everything down. But it's, oh no, I guess it's not that strong. I love this stuff though, guys. When I say should, it means that I don't know, but I hope that it does. When I say it will, it means I don't know, but I hope that it does. When I say it has to, it means that I don't know, but I hope that it does. And what happens is you start believing your opinions. It's a strong termination. No, it's just a no more short scenario, right, Phil? And look what the market did. So strong makes me feel like I should be going the other direction. No more shorts means I just have to pump the brakes and be calm. And I'm a big fan of language, and that's why I address these when I hear them. The most dangerous words in day trading are when you look at your charts and you say things like, it's down, but you're still justifying. But there's a lot of confluence at that termination condition. Who cares? Should, will, all of these are red flags. You already took a loser, right? Who cares about the confluence? My plan says down short. My plan says don't go short into areas. These are the strongest trigger looks I could ever have, Phil. Now, you could say, because of this strong confluence of areas, 15-minute termination condition, if my small triggers get in the right position, then I'll look for a counter trend trade. Does that make a little more sense? Not creating an opinion about the area, but rather saying this is how it fits my plan. This is how what I see fits my rules. And you're learning that counter trend trade, Phil, and you let's admit it, you're a little aroused for the counter trend right now. Because it's neat. And when it works, you look like a freaking rock star. But when it doesn't work, Phil, it blows out accounts fast. Rules haven't been met for any longs. But that's one of the things that happens. Hey, I learned this great new trick, right? I'm going to take that trade every chance I get. I'm going to stop looking for trend trades. I'm only going to look for counter trend trades. Not a lot of opportunity for that. A lot of opportunity for losers. And I don't tell you guys how to trade. But I tell you, if you're hell-bent on a long trade right here, you're not reading your indicators. Victor says, since I started doing trend trades again, he's had 18 trades in 3 days, 15 wins and 3 losers. 83% win percentage. So Victor, are you suggesting that you don't need counter trend trades? But see, Phil, it's blowing through your areas, right? It's odds favorable, and you're still looking for the counter trend. Careful. I'm at least 3 or 4 bars from even considering it. It could happen. That looks more like a momentum short to me. We'll watch it. We'll see what happens. We'll come back to it. Oh, that's a picture. I was like, why won't it annotate? Why won't it go? Crude oil, not doing much of anything. There we go. Look at that. Phil, John Novak wrote a book for you. You'll oh my gosh, it went down, but it was such a strong termination. It was such a great confluence of areas. I'll be damned. Sorry, Phil, I'm just playing a little bit. I feel better. I'm not feeling sick anymore. How to Commit Financial Suicide in One Easy Step by John Novak. He was drinking when he wrote this book because there's actually 2 steps. Chapter 1, warning signs your friends are in trouble. They are trading against strong triggers. Chapter 2, warning signs your friends are not paying attention. They're trading in determination conditions. Seek help immediately. They're trading against strong triggers. They're trading in determination conditions. And man, I'm more excited about the opportunities for a short than I am a long. I just want to get through this. Friends don't let friends trade against strong triggers. That's it. And here I am being your friend, reminding you of that lesson when you say things like strong termination, lots of confluence. You are baiting yourself into going counter trend when the rules aren't met. Does that make sense? Because I've done it. I love these lessons though. And you know what's funny is we all have different days. Some days we're the most patient people in the world. Some days you would think we never looked at a chart. And guys, I don't care where you are in your trading, you'll find that that's true. And I think that having the fewest moving parts helps eliminate that level of occasional confusion, if you will. I'm looking for one trade. I know that it's enough to pay my bills. If that trade sets up, I'm good. Phil, they're trying, aren't they? Small triggers up. But there's nowhere to go. And that's the challenge with this one. Is that you've got a level of resistance that's already held 1, 2, 3, 4, 5, 6 times. But that was your pattern. If you were going to take it, you had to take it directly into an area that could create a bounce. That doesn't seem like a great plan. I love this trade. And don't get me wrong, Phil, this is one of my favorite trades in the world. But I want an up bar, not a down bar. And I need to have room to make money. That could be the one that goes. I don't know. Could be. We'll see. Hate those crazy long bars. Look at that. Why don't we trade into resistance? Can we get like an amen or a hallelujah? Why don't we trade into resistance? Because that can happen. It's almost too simple. I know where it's at. I choose not to trade into it because that can happen. They're trying, Phil. They want to prove me wrong. They're like, man, Phil's a good guy. Let's go up for him. Need a little more pullback, right, Papa? The challenge is we're pretty stacked here. So I would need to get up in this range, and then I'd have to have a close that gives me enough room. I'm not done looking for shorts. My rules say as long as these are down and I've got room to trouble, my job is to go short. So let's do this. I've tried to fight it. I have. I have tried to fight those triggers 100 times. I have failed miserably 80. Whew, look at that. Well, there's your pullback, Papa. There's your pullback. What's it look like on Ninja? Weak bottom, potential to break, 3 divergences. Is that your best look for a long? Probably not. Let's see what happens. Let's see what happens. Papa, are the rules met here? If it closes below? Some big honking bars. Does it fit the rules? Down, room to trouble, pull back to an area. There's only one thing missing though, right? A little bit of psycho action, Jen. Little ex-girlfriend with a chainsaw. They're pushing. All right, so today's lesson is on strong terminations, Phil. Just kidding. Great spot for a bounce, right? Great spot for a bounce. And we got it. The long to the short. If I had a nickel for every time John Novak and I had said the long to the short. The long to the short. My rules say down. And John Novak will say, well, I've found a way to get to your short, Mark. And we'll see what happens. Can't go long yet. There's my pullback to the zone. If the top of the zone holds, if I get a close below 65.50, I've got $100 to trouble from the weak side of triggers. Seems tight. No, they won't flip. They're not far enough gone, Victor. They're not far enough gone. There is a lot of tightness. The more the market is range bound, the more consolidation you'll see on these charts. The more zones you'll see produce. And sometimes you can't see it on the 1 minute so much. But when you get these areas where the market just can't break out, look at that. That's what produces Fibonacci. Ups and downs. Momentum, potential to break, pull back to the area inside, make money. Doing it, rinse and repeat, right, Cav? Same thing every time because it works. Same thing every time because it works. It does ebb and flow, Phil. And it's an interesting phenomenon. Absolutely, Jen. Triggers break? Well, they haven't. There they go. And Jen, so let's talk about this. This is where my brother would come in and offer a really good chart reading lesson. There's your first divergence. There's your second divergence. Look at how your small triggers are still up. There's your third divergence, which is higher. Look how your small triggers are still up at the time of that divergence. Jen, there is a time where seasoned traders will ignore divergence. If they are ascending, if the small triggers are still railing up, this market's way more likely to go up than down. That's actually a pretty great entry. And by the time that happens, it's almost 4 triggers through. Does that make sense? You can let your small triggers really tell the story, but there's a couple of factors. The divergences are ascending, which means that the sellers never got to really grab hold enough to even create a lower pivot. Your indicators, your moving averages are all still up, and your fastest of all is still up. And I still tend to not fight the 3 divergences. But John Novak would tell you without hesitation, that's your look for bigger moves. So if you are in down here at the bottom for some reason, a lot of people are exiting here. And John Novak will say, your trigger said we're going up higher. And it's really a gift that he has. In the moment, no emotion. This is your chart read. And I've learned the lesson. I don't typically execute it as well as him, and I'm not afraid to admit that. I'm about 20 years behind him in experience. You're welcome. And for you guys in the room, I keep it really cut and dry, right? 3 divergences, no more shorts. And it's really that simple. 3 divergences, no more shorts. But look at the difference. Jen, do you see it? It's 3 divergences. The large triggers have rolled. All the triggers are above a fib, right? There's a million things wrong here. That's just kind of like a stutter in the sexy. And that's a technical term, guys. Stutter in the sexy. All right. We made it through another hour. Good job, everybody. Haven't found our rules met yet, have we? We'll get there. I'm going to take 5 minutes. I'm going to stretch my lungs. When I come back, it looks like we're just looking for rules to be met. Guys, this is a great opportunity for you to ask a lot of questions if you have them. Estefania's like, Mark, you don't get breaks. 4 triggers through, all the momentum, jump the fudge in, get paid at a fib. Brilliant. No, I'm just kidding, Estefania. Do you guys see it? Momentum and path, find a way. And I love it. You get in 0775. So you're in above the thing that could cause a bounce. Guys, remember when I said lines are bouncy? Estefania is the one woman in the world that listens to me. There's the bouncy thing. There's her entry above the bouncy thing. And with momentum and path, easy money, right, Estefania? Great job. Great job. And now they've got to make some decisions with weaker triggers right at a fib. It doesn't mean there's more coming. Paul, there's more to it than that. But yes, it's up or down. 3 divergences descending. Let's see if we can find an example. Well, that had a big ugly fib in the way. In Estefania, you don't need to hope that the fib breaks, right? There's going to be more trades. There's going to be more perfect trades. So, Paul, that's your look, though. The fact that there was a fib here changes the dynamic of it, but with no fib, absolutely. That's a pretty darn good look. Three ascending, but then again, there's the fib. 3 descending, and hey, it didn't work out. So it's not a I promise to keep you safe and warm look. It's just something. The large chart's got to be perfect to support it. The large chart has got to be screaming to support it. All right, guys, I'll be back in 5. Trader crashed. The first annual Nexgen Golf Classic. Gab, John and I have talked about that quite a bit. We are working towards it. What we really want is the funding company to start running a little more self-sufficiently before we plan big outings like that. Excuse me. But the invitation is always on the table for you guys. If you are in my neck of the woods and you want to go play golf, let's go play golf. I am not a great golfer, but I sure do have fun. And I'm not afraid to have a drink with you out on the course. So let me know. I've done it. I've had the opportunity to play golf with quite a few Nexgen clients. Even created a Nexgen client through golfing in Spokane. So I enjoy it. I'm not shy. Not all smart people are no fun at a party. The Novaks prove that to be true. All right, get Ninja Trader back up real quick, guys. So right now, Victor, that's your look where we have to wait for the end of the bar to know where it's going to be. Does that make sense? It looks like they could go up, but if the market drops, these are going to be down. So in 3 minutes, we'll know. And this, for me, Phil, I don't know where they're going to finish. My small triggers are down. My large triggers are rolling. I'm inclined to believe that these are more likely to end up going back down based on this look than they are to go up. Does that make sense? So I've got context clues over here. You've got to, though. I don't know if I say that enough. You've got to mess things up, guys. You've got to make mistakes. You've got to do all the things that new users do. I think we put too much pressure on ourselves to be perfect in the beginning. I think we put too much pressure on ourselves to be successful when we haven't put the time in to be successful. One thing John said to me once, and this was funny. So I think it was probably about a year and a half ago, and I was living in Dallas, and I was playing golf. And I told John, I said, man, my golf game's just not going anywhere. I'm stuck right in the low 90s. Occasionally I hit a high 80, but I don't feel like I've gotten better over the last year and a half. And John, being John, he goes, well, how much time do you spend at the range? I was like, well, none. Well, how much time do you spend practicing putting? None. He goes, why do you expect to become a better golfer by playing golf and not practicing what it takes to play good golf? And I realized that there's a huge parallel between trading and golfing, because most of the people that I encounter want to become better traders by taking trades, when the reality is, and this is a pretty real reality, if I take this picture on its most basic form, I have to learn this pattern, right? Which means that I have to, in no uncertain terms, be comfortable with identifying momentum on the fly. It means that I have to be comfortable recognizing when there's a termination condition. It means that I have to be comfortable with the language for entry. Which means that while I am floundering trying to become a successful trader because I'm looking for the trade, that's it. I am singularly focused on a trade. I want to enter the market. I want to make money. I want to buy nice things. I want to get out of debt. When the reality is that a trade is those three concepts that Mark teaches in his room every morning. And when you learn to identify them, then you have a trade. And not just a trade. You have a trade that you can prove wins more than it loses. You have a trade that creates an edge. You have a trade that creates long-term success. So there's our little from behind the pulpit for the day. I love it. You ready? Trading is not a game of perfect. And then your little footnote. Trading is about identifying, I can't spell, an edge, an advantage, a pattern that is proven to win more than it loses, to take that pattern without fail, hesitation, or distracting thoughts, let probabilities dictate your overall outcome. There we go. That's it, Boaz, right? Go spend some time. Go spend some time on the range. One club. Get really good at it. I'm telling you guys, I can hit a sand wedge 100 yards. And if I'm 100 yards away from the green, I don't have any concerns about whether or not I'm going to get on that green. It's the damn 250 yards before that 100 yards that kills me. But this is it. Identify an edge with that advantage, right? This is trading in a nutshell. Phil, thanks for the picture. I've turned it into the trading scenario. So if you're a golfer, you understand this. Get really good at the individual parts that create the game. Get good off the tee. Then get good with your mid irons. Then get good with your short irons. And then become a putter. And eventually you'll put all of those together to be a great golfer. Now, if you're me that's only good at one thing, you suck at golf. As I do. Good lessons. Good lessons. I don't mind sucking at golf. I have a good time out there. Do you like that, Phil? It's funny how many parallels there are between golf and trading. And golfers get it. But it's really like that with anything. If you played sports in high school, you remember for every one game you played, you had at least 4 practices. For every one game you played, you spent more time doing drills than you ever did that one thing in the game. But when that one thing showed up in the game, you were ready for it. Right? All those drills, wrapping someone up to tackle them, that paid off when you had to make that open field tackle. That spike, that bump set spike, paid off when you had to do it. Trading and golf is like sales, so much overlap. See, I don't know. I suck at sales, Phil. Well, hold it. I suck at golf. Maybe there is some overlap. I'm the worst salesman ever. I'll admit it. I've tried sales. I'm that guy. Have you guys ever seen like the comedy shows? Like, hey, do you want to buy this? And they're like, no. Like, okay, have a good day. That's me. I'm the worst in sales. I don't like selling people. I could probably sell the software. I believe in the software. No, in sales feels like a losing trade. I get it. But it's part of the percentage, right, Phil? Yep. Dial the phone 100 times. Someone's going to say yes. So, good stuff. Can't go up. You also maximize sales. There you go. With a good target. I like that, Estefania. Everything is process that yields results. So I was in the service industry for decades. I was a bartender, believe it or not. I know that's probably hard to believe. And I used to believe that every person that walked into my bar had at least $20 for me. And there was a process to get them out of it, to get it from them, right? In sales, you get way more no's than the trading plan. Yeah, you do. So I just assumed that I was going to be victorious. I assumed that I was going to make money every day. So I went through my process. How am I going to do that? I'm going to be friendly. I'm going to make sure that the order's right. I'm going to make sure that drinks are full, that the drinks are good, right? And the process yielded the results. And it was awesome. Put myself through college, got my wife through college, raised 2 kids in the service industry. So get good. Know what your goals are, know how to achieve them, and then just follow it. You hate sales too, by the way, which is why you're a trader. Must have the want to hang in long enough to survive and then eventually thrive. Yep. You also find the gaps to make them spend. Yep. Upselling, right, Estefania? You're in the service industry. Yep. I use the penny trick. Started with 10 pennies on your right pocket. Every time I solicited someone, regardless of a sale or not, a penny moved to the left pocket. The goal was to have 10 pennies on the left pocket at the end of the day. After a while, there were 2 or 3 sales for each 10 pennies. There you go, Victor. Probabilities. Probabilities. Guys, they're not giving us anything over here. NASDAQ's into a termination condition here. And consistency. I agree with that. Consistency of the profit. I was watching a video on golf. Is it, Estefania? I was watching a video on golf, and the title of the video is "Why Do You Suck at Golf?" Which, of course, I had to click on it because it's like they were talking to me. And one of the first things they said is that if you hit a bad shot, so if you take a losing trade, you change your swing. You adjust your plan. I hit one shot that wasn't good. So therefore, I've got to change my grip. I've got to change my swing. I've got to change everything to fix it. Traders do this. Most traders don't give a plan a chance. How many of you have pictures of 100 of the exact same trades? Does anybody? Could you go through your Rolodex and find 100 pictures of the exact same trade? I could, easily. Can you prove that that exact same trade wins more than it loses? So second question, can you prove that that one trade, that one look, wins more than it loses? Nobody can? Well, I could. I could. And you know what it came out to be? The KISS plan. That's what I share with you guys every day, is that plan where I've taken thousands of pictures and logged countless hours and said, hey, Nexgen users, here's the way to do it. So what you did, Phil, is you did half of the drill, right? I took a lot of pictures. Probably didn't annotate them. Probably never looked at them again. They said to take pictures. Well, there's my picture, right? Let me delete it. Bunk. This is a pretty good lesson. Let me delete it. Bunk. I don't know what this means. Let me delete it. Bonk. Right? When what you should be doing is going, man, let me go back tomorrow and let me study this and let me try and reinforce these lessons. And Phil, I think you've just had that aha moment, and it's paying dividends in your trading. There's no doubt in my mind it is. Because now you're not just taking the picture, you're starting to ask, what does the picture mean? What does it mean to me when I see this? What's the result more often than it's not when I see this? And Phil, what you're doing is you're finding this amazing level of patience because now you trust the plan. Now you're convinced that those trend trade wins aren't just luck, that they are a byproduct of consistency, of the process that creates them. And Boaz, when you're golfing to particle to simulate a real game, to practice like a par 5 and 4, I do this, Boaz. I will go to the driving range and I'll hit a driver and I'll have my fictitious fairway. And then I'll grab a 7-iron. And then I'll grab a wedge. And I'll do that at the driving range. I'll take a bucket of 100 balls and it's like playing 30 holes. Unless I have a specific club that I'm working on, I'll do that with like the last 30 balls in the bucket. And if I don't hit the shot correctly, I don't get to go to the next shot. So if I slice a driver into the woods on the driving range, I've got to re-hit the driver. I've got to take that penalty. That's funny that you said that. That is exactly what I do at the range. Because I'm putting myself in the mindset, I've got to string together 3 or 4 of the exact correct process to give me the highest chance of success. Excuse me one second. YouTubers, we're going to shut it down. There's not a lot going on in the room and our rules aren't met. Thanks for being here. Have a great day.